You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Good afternoon. For those that don't know me, I'm Joe Bracco, and I head up sales and strategy for the MIAX exchanges, and I'm happy to be here representing my colleagues from the MIAX Exchange Group. I'm going to use my time to recap what we've worked on this past year, in addition to working hard to bring you what we hope will be a memorable OIC conference. When we last met in Jacksonville, we had just announced our partnership with T3 Index to launch the Spikes Volatility Index. MIAX officially began trading cash-settled Spikes options on February 19th. And while our ramp-up has been moderate as we work to launch a futures contract, interest has been high from the market-making, institutional, and retail communities. The team and I have been working closely along with Spikes inventor Simon Ho on marketing and educating the trading community on the benefit of Spikes. In fact, Simon is here at the conference and available to meet to discuss these benefits in person. Built on tight SPY option bid-ask spreads, the Spikes Index offers radically faster dissemination, publishing every 100 milliseconds as opposed to every 15 seconds for the VIX Index. The Spikes proprietary price dragging technique minimizes price distortions for traders in volatile and illiquid markets by insulating the index from erratic movements in the bid-ask spread of the constituent options. Additionally, the Spikes settlement auction is highly transparent and accessible across all 16 U.S. options exchanges. Participants can contribute prices and arbitrage mispriced components, resulting in a more robust index settlement value, all designed to drive transparency. You can find more information on Spikes options by going to the MIAX website and clicking on the Spikes tab. The Spikes site has product information, index data, settlement data, as well as full 100 millisecond tick data available for download. The teams at both MIAX and T3 are confident that the launch of the Spikes options and futures products will be viewed by the trading community as a powerful alternative to current volatility offerings that will ultimately help grow the volatility pie through healthy competition, all while transforming the trading experience for investors. In that vein, we have competitively priced trading fees for Spikes options, where it's free to trade as a priority customer or market maker providing liquidity, and just 10 cents for all others. Our fee caps are also very aggressive and applied on a per-trade basis. Caps are 10,000 contracts for simple trades and 25,000 for complex. The launch of Spikes is just the first of many joint initiatives between T3 Index and our parent holding company, Miami International Holdings, as we set down an exciting path to offer additional tradable products that give investors more accessible and cost-effective ways to hedge and invest in volatility. On the business development side, the team continues to focus on pursuing and forming strategic alliances with a wide group of firms as we look to scale our business and bring on new partners and proprietary products to the MIAX family of exchanges. On April 4th, MIH announced our latest strategic partnership with Templum Markets. Templum offers a regulated end-to-end solution for raising capital and secondary trading for private digital securities. The joint venture will be an SEC-registered and operated facility of an exchange owned by MIH to develop a fully regulated exchange to list and trade digital securities. This is all subject to approval by the SEC. Now I want to talk a bit about our core exchange businesses. It was at this conference last year that we announced our third U.S. exchange, Emerald. After an SEC shutdown delay, Emerald was launched just about 2 months ago on March 1st. MIAX Emerald is the newest member to the family, which currently consists of MIAX options, offering conventional pricing with customer rebates, marketing fees, pro-rata allocation. MIAX Pearl, offering maker-taker pricing, price time allocation, and Emerald, which is a hybrid model of the two with pro rata allocation and maker-taker pricing. MIAX continues to innovate with Emerald, providing even lower latencies and higher determinism than the industry-leading performance of its two MIAX exchange predecessors. With the launch of Emerald, we now have access to approximately 80% of the overall U.S. options market volume. This additional access allows MIAX to further meet the needs of our member firms by providing access to this growing market segment. One early milestone and data point worth mentioning. Emerald hit a one-day market share record of 1.32% just 1 month after launch on April 3rd. And all non-transaction fees, with the exception of connectivity, continue to be waived as we work to onboard new trading members and grow market share. The addition of Emerald now gives the MIAX Exchange Group 3 different pricing and allocation model combinations, offering member firms a choice regardless of their current or future preferred trading strategy. On MIAX options, we continued to enhance our offering over the past 12 months by rounding out the suite of functionality in our complex trading book through adding orders tied to stock mid-last year. We are also in the process of adding functionality for solicitation, which will be implemented in the near future. On MIAX Pearl, steady and solid market share has helped current members scale their activity as we add trading members to the platform. We celebrated the 2-year anniversary of Pearl this past February, and market share there has remained consistent and strong, setting a new daily high of 6.69% this past March 4th. The MIAX Exchange Group set its own single-day record for market share of 11.64% on April 15th. Our market share in SPY options has remained steady across all 3 MIAX exchanges at roughly 8.5% on Pearl, 5% on MIAX, and 2% on Emerald. MIAX has also recently made public plans to compete in the highly competitive U.S. cash equity space. We plan to launch a maker-taker price-time equities exchange late Q1, Q2 of next year. Our goal there is to bring all of the qualities of the MIAX Exchange Group to cash equities, a highly competitive, aggressive fee schedule with low non-transaction fees, all while being a voice in DC for our members. Each time that we've launched a new options exchange, folks have asked, why another exchange? We believe we have answered this question each time by demonstrating that there is value to new entrants that bring innovative technology, exceptional risk protections, fair incentive programs, and equity ownership opportunities. Cash equities will be no different. We stand behind a proven track record that clearly demonstrates that we can build critical mass quickly on a new platform and provide for a better trading experience, which we know will make folks want to choose the MIAX exchanges for their trading across asset classes. So to recap, MIAX options successfully launched volatility options on the Spikes Index in February of this year. We will have further announcements on additional Spike products later today. MIAX Emerald joined the MIAX Exchange Group following a successful launch on March 1st and is enjoying early success. The MIAX technology team won the most innovative exchange technology category at the Fund Technology and Wall Street Letter Awards in 2019. And the MIAX Exchange Group will launch a U.S. cash equities exchange in late Q1, Q2 of 2020, pending SEC approval. And we'll be making an announcement later this week on the closing of an equities rights program on that exchange. We will continue to explore new strategic partnerships and relationships. In addition to Tom, Simon, and myself, we have a number of other folks here from the team, including our General Counsel, Barbara Comley, our CIO, Doug Schaefer, and Head of Reg, Ed Dietzel, as well as many other folks from our Business, Reg, and Operations team. Please make a point to seek any of us out or stop by the Cabana on Thursday afternoon. We're all happy to answer questions about Spikes, Emerald, or any other topic that's on your mind. With that, I'd like to introduce STA President Jim Toes. Thank you.
Good job. I forgot he has a flu. Sorry. Hi, I'm Jim Toes with the STA. The STA, for those of you who aren't familiar with us, we are a trade association. We have 20 affiliates in the U.S. We have 4 in Canada. These affiliates are run by volunteer boards. At the national, when you join the local affiliate, you become part of the national organization as well. The services that we provide to the industry comes in the form of education, through various newsletters that we put out. I hope you're getting them. We have around 25,000 folks on the distribution list today, so please, if you're not getting our newsletters, let us know, and we will get you signed up. We also do networking, and we advocate on behalf of the industry with the various regulators on on initiatives that they're working on. I want to thank OCC and MIAX for putting on this great event and also providing such a great forum for us, for STA to get up here and talk about things that we're working on. We do appreciate the audience here. We also want to congratulate OCC and MIAX and actually all the exchanges for what they've done with this conference in the past 5 or 6 years that I've been fortunate to attend. I mean, they really, what this event was when I first came maybe 6 years ago to where it is today as far as the quality of the content and the speakers is really outstanding, and they've been able to add that element without taking away of some of the more fun aspects like the golf outings and the social and the networking part, which is fun, but it's also equally as important. I want to provide a couple of updates here for you. The most important one we just want to talk about, because it's mostly timely, is on Rule 606. This is the rule, the SEC rule around the greater disclosures around how orders are handled in the marketplace. I hope that you saw that there was an extension that was granted from May 20th to October 1st for when firms have to begin collecting data for that. The extension obviously was a nice thing to get, but when you have such a complicated rule filing as is where the implementation is very complex, regulatory guidance is often needed in order for the industry to put this on, to implement it with as few problems as possible. So that guidance from the regulators tends to come in what they call FAQs, frequently asked questions. We are hoping to get that in the next couple of weeks. We would strongly urge you and your firms that if you think that there is a version of these FAQs that could cause your firm problems in adhering to that October 1st deadline, that you, this flies up here, that you kind of raise your hand now and get in with either, with whoever that you're working through on it, be it FIF or SIFMA or STA. Since last year, since we were here last time, we have written 7 comment letters on a range of issues from MiFID II, capital formation, tick size. I'm going to go through every single comment letter in 3 minutes. But the one that we really wanted to touch on here is one that we wrote on FINRA's continuing ed program. I realize this is probably not the most the greatest topic, the exciting topic to talk about, but the continuing ed program fits into a much larger strategy initiative that STA is in the early stages of taking on, and that really has to do with people who find themselves in between jobs. Okay, so for FINRA, you can't practice in this industry unless you have a license. You cannot take continuing ed if you don't have a license. So in 2016 and 17, we really did encourage FINRA to redo their licensing program, which they did, not just because of us, because of other industry folks as well, which is now called an SIE exam. If you're not familiar, please let me know. And then the continuing ed also is very important, because in case you're not aware, if you lose your job and then your license, you're not able to take continuing ed, and that's obviously a hard thing to do. So I just want to read you one. I don't have it. Okay, so one line here that we really feel that this issue acutely impacts the. Here's what we wrote. STA believes that FINRA's current policy is flawed, this is in the comment letter, because it creates an unreasonable barrier to re-entry for qualified individuals, in particular those who are primary care providers. Okay, so obviously we have people who have families, they take an extended leave from our industry, they cannot get back in after 2 years, they become real estate agents. We don't need that. We don't need real estate agents, we need talented people to stay in our industry, continue to work on that. More recently on this effort, we made an announcement last week. The networking events like this could be the difference between someone getting a job and someone not getting a job. We have always, not just STA, but I think a majority of associations have always, when they were asked, have allowed people who have been in between jobs to attend their conferences for free. With our Washington, D.C. effort, that has always been the case, that will always be the case going forward. The difficult part, though, is obviously 2 nights in the JW Marriott, travel down there is difficult. All right, we have sent out an open announcement to people who want to put their name on a list, and we will be conducting a raffle in early August, where we'll provide room accommodations and travel reimbursements for people who are in between jobs. And this, again, this is just the beginning of a larger effort that we hope to announce later on in the summer. So I want to thank you for your time on this. And it's now my privilege to introduce Ellen Greene, Managing Director of SIFMA. Thank you.
Thanks, Jim. Good afternoon. I want to thank Jim for the introduction. My name's Ellen Greene, and I'm a Managing Director in the Capital Markets Division at SIFMA. I want to thank MIAX and OCC for hosting what promises to be a great 37th annual event. SIFMA utilizes a committee structure that brings together industry members to form consensus on opinions on important regulatory and market structure issues. In the listed options space, SIFMA's trading committee has grown to over 40 member firms and represents retail, market makers, wholesalers, and institutional brokerage firms. Together, our committee advocates on issues affecting retail and institutional investors and serves as an industry coordinating body to promote fair and orderly markets, informed regulatory compliance, efficient market operations, and enhanced resiliency. SIFMA values the dedication of our members, and we work diligently with the regulators such as the SEC and exchanges like MIAX to educate them on our positions and why we think that they're important to change, or why maybe the status quo is important too as well. In 2019, SIFMA continues to work with the exchanges and SEC on exchange give-up rules to modernize the current rules that allowed executing brokers to give up a trade to a clearing firm regardless if any agreement was in place. This creates risk for the OCC clearing member, which may not be responsible for the ultimate clearing of the trade, or they may not be able to identify the end customer or firm. While SIFMA did not view this as a competitive issue, because give-ups are governed by individual exchange rules, we needed a lead exchange to propose new rules that would allow an executing and broker and clearing firm to establish agreements governing the give-up process. SIFMA worked with Nasdaq, who adopted a balanced rule on their PHLX exchange that allows clearing firms to control give-up agreements or leave things status quo. To date, the exchanges continue to file new rules with the SEC, and we applaud MIAX for being the first exchange to adopt rules for each of their markets. We're optimistic that the remaining exchanges are working currently on their new rules with the Commission. While the give-up rules reduce risk for clearing firms, there's still additional work to be done here. SIFMA supports the proposed OCC rule whereby an actionable identifier will be required on all non-market maker trades that will allow the clearing firm to identify the end customer or firm who's responsible for that trade. The rule is currently on file with the SEC, and we look forward to working with them on the implementation, which will likely impact the majority of firms in this room. Unfortunately, some of our key issues are quite challenging to solve. One such issue is strike listings. As many of you may know, the longer-term strike listings are governed by a national market system plan called the Option Listed Procedures Plan, or OLPP, and this provides procedures designed to facilitate the listing and trading of standardized option contracts on each of the exchanges. While this program ensures consistency in certain strike listings, the popular weeklies and other strikes fall outside of the plan and are based on individual exchange rules. Hence, they become competitive in nature. Today, as a result of this bifurcated market structure issue, the industry finds itself with approximately 1 million strike listings. However, on any given day, trades occur in only 10% of the eligible listed strikes, and there is open interest in only 50% of the listed strikes. SIFMA has been advocating for smarter strike listings for several years, but to date, unfortunately, we've had little success given the complexity in the exchange rules and also determining what strikes should be listed and developing the accompanying rule set. Working in partnership with the exchanges, OCC, SEC, STA, and other organizations, we're analyzing data to better understand customer behavior based on open interest, and we're cautiously optimistic that when we return for the 38th annual OIC event next year, we'll have much more positive news to report here. It is now my pleasure to introduce Julie Bauer, OCC Executive Vice President of Government Relations and Investor Education, for an update on the OCC U.S. Securities Market Coalition. Thank you.
Thanks, Ellen. Good afternoon. I'm Julie Bauer. I am Executive Vice President at OCC for Government Relations and Investor Education, but I'm here today in my capacity as leading the U.S. Securities Markets Coalition, which is a coalition across the options industry where we combine forces to educate and advocate with policymakers in Washington on issues that are important to the industry. In that regard, we have lots of opportunities every year to play both offense and defense. And I can tell you offense is a lot more fun. So I'm going to start off with an issue that we spent a lot of time on over the past year, and that has to do with capital requirements. As you know, some of the capital requirements that went into place post Dodd-Frank and in the intervening Basel Committee decision years have really hobbled the listed options industry in that the capital calculation doesn't really reflect the risk at all. And we have been talking about this issue for quite some time with banking regulators who are in charge of all of those rules. But over the last year, we spent a lot of time talking to lawmakers on Capitol Hill about this issue as well. It's a complicated issue that involves multiple agencies, which in Washington is a very hard draw to get because it's the timeline on getting new regulations is difficult with a single agency, but when you have a three-agency job, it's even more complicated. I was so impressed with the willingness of the options industry participants, from retail firms to market makers to clearing members, exchanges, and of course the clearinghouse, to give time and energy to this project. And in doing so, we were really able to demonstrate time and time again to folks in Washington that this was an issue that was vital to our industry on all fronts. And we were able to get bipartisan legislation introduced in both the House and Senate last year, and we achieved something that is very rare in Washington in that we actually had that piece of legislation passed unanimously by the House of Representatives. It was a great moment, really, for to see the results of the educational efforts we've done, but also a great message to the regulators that lawmakers on Capitol Hill were focused on this issue, that there was broad bipartisan support, and that the agencies could move forward with something on this front without worrying about, backlash from the Hill. Now, as happens a lot in Washington, progress in the House of Representatives doesn't always lead to passage in the Senate, and that is what happened with our bill. But I think many of you know that the banking agencies led by the Federal Reserve did put out a rulemaking, a part of which would address this issue. They've taken comments, and the work continues on that. I'm happy to say that our champions on Capitol Hill continue to have a keen interest in this. And they're really from across the country, not just from the states where there are large options industry folks, but really across the key oversight committees. We've really been able to raise the level of knowledge and understanding of the special parts of the options industry and the special concerns and the qualities that really require a special look at options in particular. So that is continuing. We continue to have good conversations with policymakers on the Hill and at the agencies, and that is work that will continue through the year. We will also have some defense to play, as is often the case for us in this industry. The defense is on tax issues. So there's two in particular. One we've dealt with many times before, proposals for a financial transactions tax. It's out there, it's being discussed. It's obviously much broader than just our industry, But we are working with our coalition partners in Washington and across the industry to educate folks on the impacts that such a tax could have. Also, proposals to subject options to mark-to-market tax treatment. As you may recall, this was a big issue during the tax reform effort a couple of years ago. Senator Wyden has indicated his intention to release a paper and reintroduce legislation on that front, so that's an issue we'll also be spending time on this year. We will continue to keep you all posted, but I want to say the options industry is doing a great job of sticking together and delivering these messages consistently to the important decision makers in Washington, D.C. So with that, I will wrap up, and I'm happy to introduce Amy Lawson, First Vice President of Product Development at OCC.
Sorry, it's a one-way stairway there, but thank you, Julie. Good afternoon, and welcome to sunny Florida, sometimes, but OCC desires to provide exchanges, clearing firms, and market participants with tools to enhance capital and operational efficiencies. I'm here to update you on 3 key initiatives providing services and issues leadership benefiting the industry. Specifically, first, the development of OCC's next generation Renaissance clearing system. Second, OCC's collaboration efforts with SIFMA and STA to bring about strike listing refinement. And third, how OCC and member firms are driving the removal of systemic risk from the give-ups process. You'll also have the opportunity to hear about some of these in more detail from the industry leaders panel, which includes my colleague John Fennell, and during our CEO John Davidson's fireside chat. Let's start with Renaissance. It's OCC's next generation clearing and risk management system. Our platform for the future will drive OCC and industry transformation as it simplifies and enhances real-time clearance, data, and risk management processes while increasing business agility. Renaissance will ultimately enable lower costs through a more flexible, streamlined clearing process, supported by automated controls, business flow tools, and robotics. OCC has spent the last 2 years soliciting exchange and member feedback and developing requirements for Renaissance based on what we've heard. We then performed an extensive build versus buy analysis, culminating in the selection of a well-known exchange and clearing system platform specialist. Nasdaq recently purchased Cinnober. OCC IT staff and business subject matter experts are now working with Cinnober to customize the OCC Renaissance system on their Trade Express platform. This approach will allow us to make use of standardized components while facilitating customization for our industry's needs, delivering capabilities sooner in a more cost-efficient method. By the end of 2021, we plan to have in place extensive industry testing and vetting of our new system. Second initiative is strike listing refinement. As you'll likely hear over the next 2 days, our industry is increasingly questioning the usefulness of a product offering set with my figure was 900,000 individual option strikes and maturity combinations versus Ellen's 1 million, available for trading on each of the 16 options exchanges. Many say the extensive listings overly complicate options quoting, and require participants to employ excessive amounts of technology for little benefit. OCC has been providing numerical data to SIFMA and STA, which are working to understand the impacts and recommend solutions to the exchanges. OCC will help facilitate a regulatory-approved enhanced regime for strike offerings and stands ready to offer the exchanges enhancements for their listing generation in our new Renaissance system. Thirdly, OCC, with our member firms, is driving the reduction of systemic risk from industry practices utilizing clearing member trade agreements, commonly referred to as CMTA trades. CMTAs facilitate agreements between executing and clearing firms on behalf of customers. While the use of CMTA facilitates a high level of competition, allowing customers a choice of execution and clearing venues, and providing cost and operational efficiencies, CMTAs in their current form may carry risk. This is because the ultimate clearers in some cases do not have timely information to place accepted trades in the correct customer accounts on an intraday basis. OCC and its members are working on solutions which will provide the ultimate clearer more timely visibility and automation, facilitating enhanced risk management and reducing risk. We anticipate that OCC's Renaissance system will include features based on the solutions currently being developed. Thank you for the opportunity to highlight 3 of OCC's key initiatives. I trust your time at the conference will be both informative and inspirational. I would now like to introduce my OCC colleague, Mary Savoie, our longtime OIC Investor Relations Educational Service Advocate. Thank you.
Thank you, Amy. And good afternoon. As you know, OIC's mission is to educate investors and advisors about the responsible use of options, but our ultimate goal is to increase participation in the US listed options markets. I'm pleased to say that participation in OIC education reached record levels in 2018 as more investors and advisors turn to us for unbiased options education. We accomplished this by increasing our online programs and expanding distribution channels through strategic partnerships. OIC's most popular digital programs continue to be our bi-monthly webinars, the Wide World of Options radio show, and simulcasted events. But we're also seeing growing interest in our YouTube content, which is great. It tends to be a younger audience. Last year, we released 23 option strategy videos and pre-recorded webinars, which contributed to a 54% increase in views year over year on our YouTube channel. We continue to collaborate on educational initiatives with the options exchanges and OCC clearing members. And examples of working together include working on webinars, in-person events, or sharing OIC digital content, such as our strategy videos. Please keep in mind that these services are available at no charge to all OCC clearing members and participant exchanges, so we hope you all take advantage. We also partner on options education with numerous respected organizations, including CFA Institute, the Investment Wealth Institute, Financial Planning Association, and the Chartered Institute for Securities and Investment. I'd like to take this opportunity to share some recent accomplishments. We redesigned our website, optionseducation.org, to be more mobile responsive, and we increased our focus on millennial and Gen Z investors through university outreach. OIC ensured that the options industry was very well represented at the Quinnipiac Game Forum in March by filling speaking roles in 9 sessions. The forum was attended by 1,600 students from approximately 160 different colleges and universities. So it was a great outreach for us. In addition, we partnered with the University of Chicago's Financial Mathematics Department on a half-day options education program, and we also presented options education at the Financial Management Association's University Conference. OIC is expanding its offerings for financial advisors as well by enhancing the Investment Wealth Institute Option Certificate Program, which was developed by OIC, and launching the Coffee with Cot podcast and blog series. These programs have been designed specifically for financial advisors to help support their options business. And today we're releasing an OIC-sponsored academic study on the impact of options overlays on endowments. And later today in this room, Professor Ed Zotto will be presenting a summary of that study. Looking ahead, we're launching a new creative campaign to raise the visibility of the listed options markets and also to increase participation in OIC education programs. In addition, we're working on upgrading our learning management system so that we can deliver more engaging online content. And we're seeking firms to participate in the next Options Investor Study. This study compares attitudes towards options and trading behavior between individual investors who use options and those who don't. OIC has sponsored this study every 5 years since 1995, and we use information gleaned from the study when planning new educational programs and services. We also believe it's useful to firms for business development purposes. We'll be reaching out to retail brokerage firms, including some people in this room, to encourage their participation in the study. So if we reach out to you, we hope you can support us. I'd like to conclude by thanking you for your support. We really do rely on industry support. And please don't hesitate to contact us to discuss ways that we can work together towards our common goal of increasing participation in the listed options markets. And now I'd like to introduce Paul Kenyon, Head of Sales and Relationship Management at New York Stock Exchange. Thank you.
Thank you, Mary, and thanks to this year's host exchange, MIAX. Thanks also to our partners at the OCC and the Options Industry Council, specifically Patricia Pearl. A wise man once told me the key to public speaking is to either be extremely profound or mercifully brief. You will be happy to hear that I am not going to attempt deep profundity and instead try my best to keep this short. What I want to leave you with today is a firm understanding that our customer-centric approach to running the NYSE options business has been rewarded with ever-deepening client relationships, as is evident in the growth in our average daily volume of more than 50% since 2017. To achieve these milestones, we've built on a strong track record of delivering new products, services, and enhancements requested by our clients. On NYSE American, our cube auction mechanism now supports complex orders, allowing exchange participants to seek price improvement for complex orders consistent with single-leg cube functionality. We introduced enhancements to our bold mechanism that allows firms to opt in for all submitted orders. If you work at a firm with a large development queue, this simple port setting provides users with the opportunity to source additional liquidity for all marketable orders prior to routing, canceling, or posting to the book. On NYSE Arca, we introduced light-only quote functionality, which prevents inbound quotes from trading with non-displayed interest. This has proven to be extremely helpful in providing deterministic economics for our market makers, resulting in higher quality displayed markets. On both of our equities markets, we've continued to improve the performance of our systems. We've made changes to the code, enhanced the network, and upgraded virtually all of our trading system hardware. We set a goal in 2017 to cut our average latency and pull in our tails dramatically. We've accomplished these goals with a 50% reduction in our averages and a 40% reduction in our 99% latencies. Over the past few months, we've completed additional hardware upgrades for order and market maker gateways, resulting in another 25% reduction in processing time. This strong track record of technology improvement will continue with the release of NYSE Pillar for our options markets in 2021. As you know, NYSE Pillar is already live on most of our equities markets, resulting in the most consistent performance profile of any equity exchange platform in existence today. Last May, we launched the NYSE FANG Plus option, a cash-settled European-style option on the FANG Plus index. The FANG Plus option provides investors with a capital-efficient opportunity to gain or hedge exposure to some of the world's most widely recognized technology, internet, and media companies. On March 11th, we opened the NYSE West in downtown San Francisco, our new home for the NYSE Arca options trading floor. Relocating this market to our new state-of-the-art facility not only represents our continued commitment to our trading community, but to open outcry trading as well. We continue to provide additional functionality that gives our customers flexibility in how they manage risk. Our exchanges now support repricing of both quotes and orders, and we also provide participants with the capacity to distinguish certain orders from activity-based risk calculations, allowing our participants to better manage their risk tolerance. All of these enhancements began with customer requests, every single one of them. This customer-centric approach to running our options business has resulted in 7 of 8 quarters of market share growth without the need to launch a new market. Even though we have 3 additional exchange medallions available for use, we have not opened a new exchange due to consistent client feedback that the market is already overly fragmented. When there is demand for an innovative market model that we believe offers value to the industry, we will consider ways that we can help. We have maintained our role as strong advocates of the industry, with Jim Hyde and Ivan Brown continuing to fulfill key industry leadership roles. Jim Hyde, who has been filibustering his way through the options industry since the turn of the century, serves on the board of Security Traders Association as well as STA New York. Jim also serves as chairman of the STA Listed Options Committee. Ivan Brown is a member of the newly formed Listed Options Market Structure Working Group, focused on addressing the challenges and opportunities that business practices, technology, regulation, and market forces have on our markets. 2019 marks the 227th anniversary of the NYSE, and our promise to issuers, investors, and the industry remains unchanged. We will continue to innovate based on customer demand, advocate for what's right in the industry, and maintain our track record of operating a high-performing, transparent, and trusted marketplace. We thank our customers and partners for their continued support and look forward to serving you all in the way you've come to expect from the NYSE. Next up is Tanya Patwa, Managing Director at Nasdaq.
That was awesome. Thank you, Paul. And thank you to our host, MIAX, along with the OIC, for this opportunity to present Nasdaq's 2019 Exchange Update. I'm Tanya Patwa, and I'm a Managing Director for Nasdaq's U.S. Options team. 2018 was an exciting year for all of us. Early in the year, volatility came roaring back into the market, and we saw an explosion in the demand for options. The options industry surpassed 5 billion contracts in 1 year for the first time in history. Last year, Nasdaq's commitment to be the most reliable and dependable trading solution for all market participants was reflected in our ability to maintain a seamless trading environment. For example, on December 27th, the Nasdaq U.S. options system processed 27 billion messages with no significant degradation of our latency or performance. I'm also proud to announce that Nasdaq maintained its status as the multi-list market share leader for the 9th consecutive year. As we look at 2019 and 2020, Nasdaq's U.S. options business has 2 primary objectives. First, to actively drive growth in every segment of the U.S. options market and be a leader on key policy items such as price discovery, liquidity formation, and the risk transfer process. Second, to optimize the Nasdaq offering to give our clients the ability to expand their business and manage it efficiently. I'll review a few of our accomplishments over the last year that brought us closer to these objectives. In February, Nasdaq's PHLX exchange received approval to adopt a rule that allows clearing firms to opt in and request their OCC clearing number be restricted to only members authorized to give up their clearing number on the exchange. As for our proprietary products business, the Nasdaq 100 remains a cornerstone index in the US, and we remain committed to maintaining a healthy and robust ecosystem for the Nasdaq 100 options products. Last year, we launched NQX, a 1/5 reduced value Nasdaq 100 options product entirely PM settled. We also launched NDX Wednesday settled options. Additionally, Nasdaq announced a 10-year extension of CME's exclusive license to offer futures and options on futures based on the Nasdaq 100. With over 5 billion contracts trading last year, we understand the risk our members are exposed to, and we enhanced our risk protection offerings, which included complex order book protections, including box and butterfly spread protections, market maker self-trade prevention enhancements, and acceptable trade range enhancements, which offer a more dynamic reference price logic for liquidity-seeking orders. It's been an exciting year, and we have even more to look forward to this coming year. On June 24th, Nasdaq MRX will introduce complex order handling. MRX will support the best-in-class complex order functionality currently available on ISC, minimizing the time and resources required of our members to connect. This coming Monday, PHLX will introduce a fixed interface protocol for its floor-based management system. This optional interface will allow PHLX floor brokers to accept orders directly via FIX and send order status updates to our members. And later this year, in a continued effort to harmonize the offerings across our 6 exchanges, we will be introducing a cross-market kill switch. This protection will be offered to market makers to allow them to indicate a threshold of rapid-fire curtailments in a specified rolling time period for a single badge or for a group of badges. For further updates throughout the year, please tune in to our customer quarterly updates, where we will review upcoming technology and product plans. Our next update will be on May 9th. As always, the partnership, support, and commitment of those in this room are invaluable to us, and we thank you for that. I would now like to introduce John Palmer from Cboe.
Thanks, Tanya. Good afternoon. It is my distinct pleasure to be at the 37th Annual Options Industry Conference. Today, I'm honored to join all of you and give the update on behalf of my colleagues at Cboe Global Markets. At Cboe, we're redefining the future of investment landscape to create more value for our marketplace, customers, investors, and associates. We are unique among global exchange operators in our ability to define and shape markets through product innovation, leading-edge technology, seamless trading solutions, and industry advocacy. Exchanges are fundamentally defined by the products they offer, and no institution has created more innovative tradable products than Cboe Global Markets. Our track record in successfully bringing new products to market has enabled us to partner with key index providers and industry partners to expand our diverse suite of products. In our S&P complex, we've had 2 notable developments this year: the launch of our S&P Select Sector Index Options on Cboe Options Exchange in February, and the listing of XSP Options, our mini SPX contract, on the Cboe EDGX Options Exchange in April. Our new Select Sector Index Options are designed to provide exposure to 11 key U.S. equity sectors and offer new investors new ways to efficiently incorporate sector investing into their portfolios. Sector options have a strong appeal for European investors, many of whom are unable to use ETF or ETF options due to regulatory constraints that dictate what products they can use. We also anticipate that U.S. asset managers who trade index options will add sector options to their derivative toolbox. While new sector index options have more international and buy-side appeal, the listing of XSP options on our retail-focused EDGX Options Exchange is a nod to the active retail traders. We also think that listing will provide the market with a new competitive alternative to SPY options. We believed our XSP options on Cboe EDGX will provide competitive pricing and tighter spreads, and that the contract specs at 1/10 the size of a standard SPX contract, cash settlement, and European-style exercise, along with potentially beneficial tax treatment, would prove appealing to customers. Over a month in, the early results are confirming this belief as we're seeing bid-ask spreads tighter. Further, a number of market makers have expressed interest in participating as trading flows continue to develop. So we're very encouraged by what we're seeing in the early days of XSP on EDGX. While my next comment is about Cboe futures, not options, I couldn't pass up the opportunity to mention advances in the Cboe iBoxx iShares corporate bond index futures. Our Cboe iBoxx iShares high yield and investment grade corporate bond index futures are the only exchange-listed futures product linked to the U.S. corporate bond market, and were developed through our collaboration with IHS Markit and BlackRock. The corporate bond index contracts are gaining traction, and in March, open interest in IBHY futures hit the 95 million mark, and we've added 2 new institutional FCMs. Turning to technology, 2019 is a milestone year for us as it marks the end of our multi-year, multi-exchange technology integration. The flexibility and scalability of our industry-leading proprietary batch technology allows us to anticipate the evolving needs of our customers, so we're always at the cutting edge of powering trading. As you know, last year, C2 options and Cboe Futures Exchange were successfully migrated to our batch technology, along with migrating our standard SPX options to Cboe's hybrid trading platform. We're now well into preparations for our final migration, the Cboe Options Exchange, which is planned for October 7th. The reviews so far of C2 and CFE migrations to batch technology from customers and users have been overwhelmingly positive. Increased efficiency, speed, reliance, and capability, all with the goal of providing the best possible marketplace for our products. With the migration of Cboe Options, we aim to live more of the same, along with proven technology that seamlessly integrates electronic and open outcry trading. We also look forward to being able to provide our customers with a single, world-class trading experience across all our equities, options, and futures markets. All of our exchange medallions, including our 4 options markets, will be powered by leading-edge batch technology. In preparation for the Cboe's options migration, and in an effort to unify our options functionality as much as possible, we're introducing 9 feature packs across our BZX, C2, and/or EDGX options exchanges, subject to regulatory review and approval. Rollout of the feature packs began in November and will continue through the 3rd quarter of this year. The first of 5 are already live, and feature pack 6 rolls out tomorrow. The goal of our technology migration is to provide our customers with ever-increasing levels of trading efficiency and technological capability. And when we're completed, we think this will be a real game changer, not only for Cboe, but for all of you. With that, I would like to sincerely thank the OIC, all of our colleagues, customers, and competitors for the hospitality of allowing me a few moments to speak on behalf of the Cboe team. And in particular, I wish to thank MIAX for hosting such a wonderful event in such a beautiful location. As next year's host, we have a tough act to follow. We look forward to unveiling OIC 2020 with all of you on Friday, but until then, I've been sworn to secrecy. On behalf of Cboe, we wish you all the most rewarding conference and safe travels. I'd now like to introduce Patty Schuler, Vice President of Business Development at Box.
Thanks, John. Good afternoon, everyone. Thanks to MIAX and OCC for putting on another great options industry conference. In July of last year, we added additional functionality to the trading floor where participants choose individual leg prices for complex QOO orders. In September, we updated the daily and monthly detailed transaction files to include the trades that correspond with the manual transactions from the trading floor. This new feature helped participants better identify the manual trades and was received with positive feedback. In October, we made a change to our high-speed vendor feed for both the multicast and unicast feed. Participants were required to make the appropriate updates to their systems to support the underlying symbol change prior to implementation, and we thank you for your support in making that change. In December, Box introduced enhanced functionality for complex orders trading on the exchange. Specifically, participants have the ability to create complex orders up to 12 legs, leg ratios over 99. All other complex functionality remained unchanged. This coming May, we will begin accepting complex customer cross orders. We continue to add to the list of symbols traded on Box in response to our trading floor activity. Also in June, Box will be offering self-trade prevention functionality that will allow participants to prevent their market maker or proprietary broker-dealer orders from trading with quotes or orders resting on the Box book with the same participant ID. No system changes will be required, but rather a written request will be accepted. We will be moving the current location of our disaster recovery site from Toronto to Chicago Equinix facility at the end of Q3. Participants will need to make changes in order to prepare for this move. Information will be forthcoming on that. Lastly, we are going to be combining our Chicago executive offices and our trading floor space to one location in the Chicago Board of Trade building. We are looking forward to the new space and the expansion of our trading floor. Thank you, and with that, I would like to introduce Shelley Brown from MIAX.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.